So, what is your job like as director of business valuation and advisory services? What is your day to day? Is there something you're working on now that is really exciting? Tell us about it.
Yeah, I wish I had a day to day. There's days where I wake up and I wish I had some standard cut and dry one. Right now, I'm actually pretty busy, so I don't get pulled too much into tax season or audit season, although a lot of my work goes into those two things. So sometimes I get a bit busier this time of year. I have a couple projects on the board right now. A couple purchase price allocation, if you're familiar with those, right? So part of a transaction, they you need to assign the value, the consideration of that across the opening balance sheet, right? So we're
Mhm.
working on part of that project right now, which is interesting. Say in ASC 718 work, and that's for if we have some management issued, like incentive units, right, or stock options. We need to call those out as a on the equity line. So assigning a value to those. I do some tax work. I do a lot of tax work. So primarily trust and estate work. So if you're familiar with the gifts and estate tax, right, we know that we're taxed based on the fair market value of our gifts and or our estate when we die. So a big part of that is we're working with private business owners to say, okay, you made a gift. That's wonderful. Now we got to put a number to that. And that exercise then becomes more important, certainly as we're dealing with more material numbers, right? High net worths, ultra high net worths, and then also dealing with planning strategy involving that too. So that's a lot of my work is there saying, before we do anything, right, let's think through this whole process. Let's draw out a timeline and let's start mapping towards that.
Mm. And so you're working with business owners. They've
Mm-hmm.
got this asset they've built up over years, building this small, I take it's mostly small, medium sized, privately
Yeah.
held companies.
Yeah.
Um,
Primarily. Yeah.
and so they come to you. Like, how early do they come to you before this whole, I mean, I imagine, like, you never know when you're gonna die, right? So the estate
Mm-hmm.
planning probably happens earlier, hopefully, rather than later, and
Hopefully. Yeah.
and the M&A stuff, like how long do your engagements last with a client, I guess, is my question. You're not just doing, like, a tax return every year for them, you're starting on this
Yeah.
journey, right?
Yeah. I think that's probably one part that's hard to adapt for CPAs to getting into valuation is that the project structure is so much different, right? I have probably almost no annuities, right? Most of my clients are one off. I mean, you think
Mm.
about most people needing a valuation. I'll probably never need one done, right? I mean, most people on the street out there behind me don't need one done, right? Then we focus on business owners. Maybe they need one or two done in the course of their whole life, right? So that's the audience you're trying to target, right? Whereas my tax return, I know you need to file it every year, right? I can tell
Right,
you
right.
that, right? I could tell you that all day long, but it's certainly a different model in that way. So my engagements with them, so it depends on when they come to me, right? That's the other big factor is do you come to me when it's too late or just filing something for compliance, or we do some actual planning, right? Obviously, I prefer to get earlier and earlier, and that's what I try and talk about and preach about. If you've ever talked to a trust and estate lawyer, they'll tell you everyone wants to drag their feet on this. A, because it's morbid. They don't want to talk about estate planning, right? So clients typically don't want to get in that conversation. But B, it's complicated, and they're not really interested in learning this kind of new dynamic. So a lot of my discussions focused on A, making that accessible, demortifying it, right? And focusing on, hey, what are the opportunities and benefits? Using the idea of transition planning maybe is a better one rather than talking about estate planning, right? Saying, hey, we're at this point in this great wealth transfer. You're 65 years old, you own 100% of your business. How can we focus on transferring this to the next generation, right? And that
Mhm.
happens in line with, transferring management tasks, et cetera, down the road. But focusing on helping them identify their transition plan overall and then creating, right, a reward for it, right? That if I'm targeting to an exit plan, right? I'm going to sell out to PE. I'm going to sell out to my competitor down the road, right? Whatever. There's a pot of gold right there. Or if we're talking about I'm, just going to gift it off to the next generation. Well, okay, what's the estate tax situation look like? How much money can we save you with just a little proactive planning? Those are things I try to focus on.